examples, okay? Three examples actually. The first example is, let's say there's a debtor who was a good debtor for me, and he had around 30% of the outstandings to the company, and he was having a lot of financial difficulties before 31st December 2021. Okay. And let's say I issued my accounts on 15th of March 2022. But before that, this guy who's A, he declared bankruptcy. Is the example clear, everybody? Is the example clear? I had an old debtor who was owing me money, but he had financial difficulties earlier. And now in January of the current year, his bankruptcy is finalized, and he finally declared his bankruptcy. And all of this was done before 15th March, before my financial statements were issued. The second example is, let's say A, who is again a debtor in my company, but this guy had a very good run till 31st of December. There were no issues with his payment. So when I sold him goods on credit, I knew for sure that this guy would pay me. But suddenly in the month of January 2022, fire broke out in his premises, and it was so bad that this guy decided to shut down. And let's put some figures into it. Let's say this guy owed us $100,000. Let's say this guy owed us some $200,000. The third example is, what if, let's say, there is the example that I just gave you, right? That Disney Anaheim, there's a small guy who was caught by a crocodile, and that event happened before 31st December 2021. The question is, now there are certain possibilities that we can do, right? What you could do is, the first possibility is, what you could do is, when I'm issuing a balance sheet, and in the balance sheet, when I have debtors or accounts receivable that I show, I can come up and say, okay, this guy declared bankruptcy. This $100,000 I'm not going to get from me, and I cut it down. The next situation is, I say, okay, this guy broke up. Okay, but this is 200,000. Let him not. So let's say and both of them, they're not going to pay us anything. Okay. So what I do, I remove their names from the debtors list. I say, okay, this guy's not going to pay me anymore. This guy's not going to pay me anymore. Nothing. And let's say that's the first thing. So the first possibility is what? The first possibility is, I simply go and I change my accounts. And I say that whatever should have happened, let me do it. The next possibility is, I do nothing. And the third possibility is, I simply go and I give you a note disclosure. Have you understood the premise till now, guys? Anybody, any questions? Have you understood what I'm saying? The three examples.
Can you please explain the first example, ma'am? I couldn't.
First example is, there is a debtor who's already having huge problems in his company. He's not paying me for the last 6 months. And I had some $100,000 and this debtor had to pay me. And he suddenly declared bankruptcy in January. Is this clear?
Yes, ma'am, it's clear.
Okay. So when we say subsequent events, okay, repeat 2 once. Okay, Abhishek. The next, the first example was, there is a debtor who already had some money and he already had signs of difficulties before 31st December 2021. And this guy declared bankruptcy. The next situation is, there is a debtor who owed us good money and he had no problems in that, repayment of that money. But suddenly in the month of January, fire broke out in his factory and he decides to shut down his factory. And the third scenario is, when there is a Disney case, right? Suddenly a man is there and this guy's child has died in Disney Anaheim. And that happened, let's say, on 27th of December when he was holiday. So right now, just give the examples in the background. Okay, let's now understand what is the theory that the company, that US GAAP tells you. And we will try to use the theory to understand the accounting for these situations that we have described them. Okay. Now, what are subsequent events? US GAAP says that you can categorize subsequent events under 2 basic categories. The first events are called recognized subsequent events. What are these? I will just tell you. And the next one is called non-recognized subsequent events. What do you mean by these? The first one we say are related to events that existed at the balance sheet date. So let's say I'm talking about, in my example, I'm talking about 1st of January 2021 to 31st of December 2021. And let's say the accounts got released on 15th of March 2022. So we say, if I am talking about subsequent events which existed at the balance sheet date. I will call it a recognized subsequent event. And what do I have to do? I will have to record the journal entry in my books and also give a note disclosure. And I have to give a note disclosure according to it. But if the event is non-recognized, what do you mean by that? That means conditions pertaining to this event did not exist at the balance sheet. Then what we will do? We will simply disclose. We will not pass a journal entry. Now, what do you mean by that? Now, let's repeat the first example that we did, right? Let's say we have a debtor whom we sold goods on credit, and this guy did not pay us for the last 6 months, and I got to know that this guy is having serious troubles in his business. In the month of January, so when I close, so imagine this is what the scenario would have been in my balance sheet on 31st December, isn't it? I would have shown A as a debtor, $100,000. And I would have also shown some provision for doubtful debts on account of all the debtors in which A was one. And I would have given you a provision figure here. And the final would have come here, right? And in my P&L, I would have hit a figure called bad debts, depending on this provision. Yes or no, guys? Let's say that figure was 1,000 rupees, whatever. Have you understood what I'm saying, guys? Anybody here who's still lost and not understanding what I'm saying?
Right.
Everybody?
Yeah.
So the first event, when we said that this guy is already having signs that this guy might not be able to pay us, the only delta is instead of having a figure for bad debt that we assumed, now that figure for bad debt has become crystal clear to us. But this event already existed at the balance sheet date. Nothing new came to my knowledge that was not there in the earlier year. Probably the figures have undergone a change, but the condition pertaining to that event already existed at the balance sheet date. So ideally, what is the US GAAP telling you now? US GAAP is very clear. If certain events already has happened, for which you get new information before the financial statements are issued, we will behave as if that information came to us before 31st December 2021. So in my accounts receivable, let's say this guy paid you nothing. You will simply knock off A and it will increase the provision in your books. As simple as that. Basically, reflect that event as if that event existed at 31st December 2021. So disclose. Make all the journal entries the way you had to make. Write off that debtor, increase the payment impact of the bad debt, and also give a note disclosure. So this is the guy whose account on 31st December was $100,000. This year we declared bankruptcy, so we have more clarity on the accounts, and now I'm writing it down. Is this clear? Is the example clear, guys? Anybody, any questions? Is the example clear?
Yes,
Can you
ma'am.
repeat this
Yeah.
again? Because I lost it. The
This is
voice
Abhishek,
was,
is it?
yeah.
Which one?
Can you
Which one?
can
Which
please
do you want me to repeat? Tell me.
the one which you were just explaining?
See, what I said is, if I already had indications for that event on 31st December, then I say that the condition existed at 31st December.
Right.
Just because that final bankruptcy did not come in before 31st December, that is not a good enough reason for me not to reflect my P&L and balance sheet correctly. So if before my financial statements are issued, I get a new knowledge about an event that already existed as of 31st December, I am going to show it in my books as if that event happened till 31st December. So I'm going to knock off that debtor and I'm going to increase my P&L hit for bad debts on the 31st December balance sheet and the P&L. Is this clear? That is why we say
Yeah, fine.
record JE and also give a note disclosure.
Okay, so fine. So that means the balance sheet date you are taking for 15th March 2022 because the financial
no,
disclosures. No,
No.
31st you are taking.
Balance sheet date is always 31st December.
Yeah. No,
What?
that's it, fine. See, the definition says that the event existed on balance sheet date. So these are the two dates, 1/1/21 and 31st 12/21, right? So anything happening between these 2 days,
Yes.
irrespective of when we are disclosing the financial disclosures, we are going to consider these two dates only. That is 31st,
No,
12,
okay.
2021,
Wait.
right?
What you understood is correct, but with a
Okay.
caveat I want you to. There are two dates, right? 15th of March and 31st of December, right? This standard
Right.
talks about how would you treat events that would come between these dates? Every event. So first category is an event for which a new information came in between the intervening period, but that event has already happened on 31st of December. Have you understood what I'm
Okay.
saying? The debtor
Okay.
already has
Shraddha,
problems. I just got one second, Joseph. Let me finish. I also subsequent event means the events that will arise after the balance sheet date and before the financial statement issue date.
Huh.
The
Right.
question is, how are you going to treat with these events? Are you going to ignore them? Are you going to just give a not disclosure? Or are you going to make the changes in the balance sheet and the PM?
No, but suppose the debtor went bankrupt on 2nd of Jan
Then
2020.
also the same thing. Then also the same
Then
thing,
what?
provided the debtor had signs of bankruptcy before 31st of December.
So that means a journal entry plus disclosure, right? Yeah.
Yes, Joseph, what
That's
is
what
your
I
question? Yes, Joseph, what is your question?
yeah,
Okay.
I think the way I'm understanding is, as on the balance sheet date, which is let's say 31/12/2021, the event
Yes.
had not occurred. Anything
Yes.
which is occurring after the balance sheet date, that is 31/12, and
Yes.
before the release of the report or signing, which has a
Yes.
significant impact on the financial status, is to be reported either through a disclosure or journal entry. Is that right?
No,
No,
no.
either as a disclosure or as a journal
Yeah.
entry plus the disclosure.
Okay,
See,
fair. Got it.
disclosure will be there. The
No,
question
but
is, wait,
but
Abhishek,
for
wait.
okay.
First, Joseph, I want to explain you something. The disclosure
Tell me.
has to be there. If it is significant, it has to be disclosed. The question is, are you going to also reflect it in the financial statements by making changes in the P&L and balance sheet or not? Is that clear?
Okay, got it.
Yes, Abhishek, what is your question?
No, so you said that there has to be a significant impression, prior something to say that
So
it
the
was
term that
happening.
we use, yes,
So
the term
for
that we
okay,
use is conditions must have existed on the balance sheet date.
conditions must have existed. So that means your second example where where the debtor was good, but suddenly a fire happened on say February, and we
Yes.
are disclosing it on 15th of March, meaning we
Yes.
are closing our financial disclosure on 15th of March. So in that case, we are not going to pass the journal entry,
Very
but
good.
only
Yes.
disclosure, right?
Yes.
Okay,
The
okay.
debtor is the same, but the
Debtor
event
is the same.
that is bringing. So see, a new information is coming up, but whether that information is actually a completely new information or is it just an add-on to my existing information, that will determine whether my P&L and balance sheet has to change it.
Okay,
Is that clear?
I got it now.
Joseph,
Yeah.
is there a question? Are you okay with it?
Yeah, okay, got it now, got it.
Okay, now I'm giving, see, the rule is very, very simple, okay? Only disclose, pass journal entry and disclose. But it's a very tricky area. Okay, I'm giving you another example and I want you to tell me where I put it. Recognized or unrecognized? Okay, Rahul, can you unmute yourself fast?
Yes, ma'am.
Are you clear with the concept?
Absolutely right, ma'am. Yeah, I'm
Okay.
clear with it.
I'm giving you an example. Tell me what should you be doing about it, okay?
Sure,
Let's say
sure.
I am a party, I am a company, and okay, sorry, there's a lot of disturbance. I'm just giving you an example and then just unmute and tell me the answer, okay? Now listen to the examples very clearly, guys, okay? Let's say I had a legal case that was outstanding in the courts of law. Okay, the 31st December, let's say that Anaheim case I was talking about, the father has already put in a legal case. And I thought that probably, I didn't know what will be the amount. So I asked my lawyer and the lawyer gave me anywhere between, let's say, 2 to 3 million will be my loss. So what I did, I had already made a provision in my books for 2.5 million, saying that this is a probable loss on the legal case that I'm going to lose. But in the month of February, the final case got settled against me to the tune of $5.5 million. Is that clear? Now, Rahul, unmute and tell me, what should I do about it?
Okay, so there's an increment of amount that what we have initially made a provision.
Yes.
Ma'am, there is a subsequent that event is recognizing on the balance sheet date. It is clear that on 31st of December, it is like there's a legal case. Okay.
Yes.
But
Yes.
in case that we cannot recognize the additional amount, because we were not aware that what additional amount can be
Yes.
we have to made. So
Yes.
here we will made where initially they made the provision of 2.5 million dollars,
Yes.
whatever it is. So
Yes.
so initially they will made and they will disclose on the balance sheet date, but before 15th of March, if it is happening 5.5, so still they
Yes.
have to be disclosed. They cannot make the provision of that additional amount.
No, you're wrong. You will have to make a provision for the
You have to
additional
make the
amount.
provision.
You have to impact
But
your
ma'am,
PNL.
but
See,
we didn't
amount is
know
certain,
na,
no?
that
No, listen. Okay, listen. See, Rahul, right? See, what is happening? The condition, see, the way you're going to treat with it is this, Rahul. Did the condition exist at the balance sheet date? First, tell me yes or no.
yeah, that is existing in the balance sheet date.
So what has happened is you got new information on that condition, right?
So,
a
so ma'am,
certain-
that is not that the amount is not
Material.
criteria to decide.
Yes.
Okay.
No,
So we have to
the
decide
amount
whether
is-
okay.
the condition existed at the balance sheet date or not. If the condition did
Got
not
it.
exist, then you will disclose. If the conditions existed and then you get a final information on that, then you are going to make the PNL impact. You are going to hit your PNL with a further 3 million, and you are going to show a liability in your books for a further 3 million, and you're going to give a non-disclosure. Saying that this was a problem, the legal case got settled in February, this is the final outflow, and the impact of this has been made in so-and-so in the PNL and the balance sheet. Is this clear? Anybody